Hello, everybody, and welcome to another edition of BullionStar Perspectives. My name is Ronan Manley, and today we're delighted to have on the show Chris Powell, who is the Secretary, Treasurer, and co-founder of the Gold Antitrust Action Committee, better known as GATA. Hello, Chris, and welcome to the show. We're delighted to have you.
Oh, I'm delighted to be with you, Ronan.
So, I was thinking of starting by asking you, as GATA, one of the assertions of GATA is that Western central banks act in concert, and they, for a long time now, have had an undisclosed official policy of intervening in the gold market, in the central bank gold market. Could you explain why you think central banks intervene into the gold market and manipulate the gold price, and how the gold price relates to all other asset prices and interest rates and bond prices?
Well, really the first objective of central banks is to monopolize the currency within their jurisdiction. I think the second objective of central banks, at least of modern central banking, is to prevent the public from understanding what they're doing, to prevent the financial press from reporting what they're doing, and to really to prevent markets from breaking out anywhere, to prevent the market economy from developing. But central banks have always had a profound interest in the gold price. I mean, that's what the gold standard was about. The gold price was connected to currency values. Central banks found that very restricting, and they began to wonder, hey, why don't we control the gold price instead of the gold price controlling us? Central bank interest in controlling the gold price used to be public record. It used to be public policy. Now it is surreptitious policy, because central banks realized that if they did it in the open, they had to dishoard a lot of their gold reserves, and that cost them a lot of real metal. Now it took them a few years, but they figured out that they could have the same effect by selling gold derivatives, by having a gold futures market. They could deploy infinite paper money in the futures market to shake out gold investors and to scare the public. If you go back through the records that GATA has archived, some of which you yourself, Ronan, discovered, like the secret staff report of the International Monetary Fund in March 1999, you find that central banks admit among themselves their profound interest in controlling the gold price, because gold is a determinant not only of currency values, but it's a determinant of interest rates, of government bond prices, and really of equity prices. Knocking gold out of the system is a primary objective of modern central banking. That's really what that secret IMF staff report said. It said that if the market was allowed to know how much gold central banks were leasing, and what the true state of their gold reserves was, that would be market-sensitive information. That would influence markets contrary to the interest of central banks. So, gold is a very dangerous competitor to government currencies, government bonds, and to government power. And that's why the governments are always trying to intervene against it. I think one of the documents that's come out in the last 20 years is a Central Intelligence Agency memorandum that talked about the necessity of U.S. government policy so that we could remain what it calls the masters of gold. Either governments will master gold, or gold will master them.
Yeah, it's interesting what you say about the IMF document. I remember when I found that in 2012, I was just scanning various servers or sites of the IMF, and I came across a treasure trove of, they weren't really internal documents, but they were documents that were in their archives that they hadn't put as private. They had left them as public. And I remember the actual phraseology of one of the reports that you referred to, saying that it was highly market sensitive. To give viewers a background, from my recollection, the report was talking about the IMF had gone to Basel, the Bank of International Settlements, for a meeting with the central banks of like Bundesbank, Bank of England, ECB, Banque de France, and they were talking about whether they should change the accounting for central bank accounting policies on gold, because up until then, the line item of gold holdings of a central bank on their financial statements just said gold. And the IMF, or somebody in the IMF, was thinking, well, let's split this into gold loans, gold swaps, and gold held. And all the central banks turned around shocked and said, no, we cannot do this because it is highly sensitive market information.
Yeah, my recollection is that it was a proposal from within the IMF staff for greater transparency in gold reserve reporting. And gold reserve reporting is done primarily by the IMF. And the staff heard complaints from GATA and people associated with this that this was misleading because the IMF was allowing central banks to report gold in the vault and gold out on lease as the same thing, the same line item, whereas a central bank might have no gold left in the vault and might be leasing it all, but the report made it look like there was all the gold still in the vault. So I think the staff proposed, well, why don't we be more transparent about this and separate in our monthly reports the gold in the vault from gold out on loan? And the staff began surveying the member central banks of the IMF, and they all freaked out because they realized, at least the ones that were leasing gold, that if the market ever found out how much gold the central banks were leasing and how much ammunition they had expended and how much they still had left for gold market rigging purposes, that would be very investable information. It would interfere with the gold market regulation that the central banks were doing in concert through gold leasing. And the central banks squelched that idea by the staff in favor of more transparency. If there was ever transparency in the gold market, I'd say the gold price would probably not need 72 hours to go to $10,000 an ounce.
Yeah, and that reminds me of the way that I got interested in researching about central bank gold. It was after going to the GATA conference in London in 2011, August 2011, which I have to commend you on. It was a very well organized conference, very professional, and it would be great if another one happened in the next few years maybe. But in the month or two after that conference, I was in London. I was still living in London, and I went to the Bank of England archives, and I was surprised that they let me in to look at all of the old documentation. And at that time, there was a 30-year rule. I think the 30-year rule would still be in place, but it allowed me to look at everything up until around 1980, 1981. And one of the most interesting nuggets of information I found in those archives were a huge series of memos between the central bank governors of the G10 who met in Basel every month and this was like 1979, 1980, they were talking about creating a new gold pool, physical gold pool, to suppress the gold price. And that is all documented. And that was spearheaded by the Bank of England and a few of the other Western central bank governors. These are the heads of the central banks. And that brings me to an area that I'm interested in, but it's pretty difficult to research, which is the Bank for International Settlements in Basel, and the fact that that is a coordination hub for gold price manipulation. But it's very low key. Nobody is allowed question what goes on there. Nobody is really allowed in to look at their archives unless you're an academic and you have a proven reason to do so. So what is your view on the BIS and what role it plays?
Well, we know that the Bank for International Settlements is active in the gold market every month, probably every day, because our consultant, Robert Lambourne, studies the bank's monthly statement of account, and he has to go into the the footnotes in the back of the account every day, or every month rather, and he notices the changes in the line items for gold swaps and gold holdings. The bank is a creature of the other major central banks. It is essentially the agent or the broker for other central banks in intervening in the gold market. The BIS provides cover to its member central banks so that the much of the gold market intervention can be conducted through the BIS and not through central banks directly. The central banks were conducting business in the gold market through bullion banks. This would probably get out much more easily, but since it's conducted largely through the Bank for International Settlements, and the Bank for International Settlements answers to nobody but its central bank members and refuses to answer questions about its involvement in the gold market, the BIS provides cover to its member central banks for their surreptitious interventions in the gold market. Our consultant, Bob Lamborn, notices the changes in the footnotes and the line items in the monthly reports of the Bank for International Settlements. On that basis, he can calculate the monthly changes in the bank's gold position. In the recent months, he's noted that the BIS's gold position, its swaps and derivatives, have increased very possibly to record levels for the whole history of the BIS. Certainly, the bank's involvement in the gold market is the highest now that it's been in at least 2 years. So there's no question that the BIS is intervening in the gold market. We just don't know all the time exactly for whom and why. We put that question to the BIS a few years ago, and the press office very politely responded to me saying, "Oh, we don't answer those questions. You have to put those questions to central banks." And of course, central banks don't answer those questions either. But we have some other documents from the BIS. I think back, what was it, in 2005, the director of its Monetary and Economic Department, William White, gave a speech in Basel about the primary purposes of international central bank cooperation. One of those primary purposes of the BIS, White said, was to influence asset prices, especially gold and foreign exchange. We have a PowerPoint presentation that the BIS presented in 2005 in a recruiting meeting for new central bank members, advertising the BIS's services. Among the services the BIS PowerPoint advertises is intervention in the gold market. So, I mean, they were advertising this to potential members in 2005. We happen to have a copy of that PowerPoint presentation on our internet site. So the involvement of the BIS in the gold market on behalf of member central banks is fully a matter of public record. The president of the Netherlands Central Bank, Zelle Zijlstra, who was simultaneously president of the BIS back in the 1960s, wrote in his memoirs that the gold price was always suppressed at the behest of the United States. So, I mean, there's no question about the centrality of the BIS and gold market rigging. All the documents admit it.
Yeah, and to that I would add that from my research, along with the BIS, you could put in the same category the Bank of England, yes, and the New York Fed and the Banque de France, and even the Swiss National Bank. Because when you look at the BIS website, under their products and services offered, they do local settlement of gold in London, New York, and Bern, which is where the Swiss National Bank is. So I think that the BIS gold accounts act as a sort of omni account, a way of central banks exchanging and swapping gold between each other, that it could move from New York to London to Switzerland seamlessly under the hood by going through BIS accounts. That's the way it used to work in the 60s. And recently I added in the Banque de France because, as you know, the Banque de France in Paris has more recently restarted trading of gold and gold lending and gold swaps. So for people that aren't really very familiar with the concept of gold lending, in a nutshell, what it is that central banks lend out the gold that they have in storage in places like the Bank of England and the Banque de France. They lend this to commercial banks who then take possession and title of this gold and either sell it or else keep it where it's still stored, but use it in various transactions. And some other research I did, I found that, well, the Bank of England is the center point hub for gold lending in the world, but there are a lot of central bank clients of the Bank of England who I think have actually sold their gold years ago, and it's never come back, but they keep it on their balance sheet as being a financial asset. And that's where that report about it's highly sensitive market information, because if anyone knew that they don't have this gold, there would be a crisis really in the financial markets. But the Bank of England is nearly as secretive as the BIS. A little bit less so because it's in the limelight, but anytime I've tried to get information out of them, they politely try to decline, and they give me the same stock answers.
Yeah, I've always long said, Ronan, that the true location and disposition of central bank gold reserves are secrets far more sensitive than the true location and disposition of nuclear weapons. And the reason for that is that, you know, nuclear weapons can only destroy the world, but central bank gold reserves can be used to rig every market in the world, and are being used to rig every market in the world. And they are used to control all currency and assets and capital and labor values. This was explained in the transcript of the conversation in U.S. Secretary of State Henry Kissinger's office in 1974, a conversation between Secretary of State Kissinger and his deputy, Thomas O. Enders. Enders was explaining to Kissinger why the United States had to persuade the European allies to keep gold out of the financial system, to stop anything that might tend to remonetize gold, because Enders explained to Kissinger, the Europeans now at that point in 1974 collectively had more gold than the United States did, and that whoever has the most gold can revalue it from time to time, and in doing so, revalue all the currencies in the world and revalue all financial asset prices. And that was an immense power that the United States wanted to keep to itself. And so Enders told Kissinger that we have to make sure the Europeans keep gold out of the financial system, because whoever is controlling the gold price is controlling all financial valuations. That conversation was transcribed, and last I looked, it was still on the internet site of the historian of the U.S. State Department. For safety's sake, of course, GATA has copied that transcription, and we have it on our internet site too. But there's, you know, another government record that says that, you know, central banks need gold to control the markets.
So that brings me to an interesting point. I noticed on the GATA website, there's a very interesting document from 2012 by two fund managers called Paul Brodsky and Lee Quintes of QB Asset Management. And they proposed a very intriguing theory that the central banks of the world, or maybe just a handful of central banks, have done redistributed gold reserves amongst themselves behind the scenes. Since, for example, Banque de France, Banque d'Italia, Bundesbank had the largest reserves, and to create a more equitable distribution of gold reserves in preparation for a future financial system, which presumably would have gold as its anchor, the central banks of the world have been redistributing gold behind the scenes. Do you think that is conceivable? Do you think it's possible? And would you lean towards the fact that it has happened or not?
Yeah, I think the Brodsky-Acquaintance hypothesis is very plausible. It would explain a few things. They argued that us gold bugs ought to shut up about central bank gold price suppression, because the underlying scheme was to keep the gold price down long enough so that they could move gold around the world in favor of the countries that had very high US dollar balances in their foreign exchange accounts, that the dollar would be inevitably devalued, and this would cheat all those countries with high foreign exchange reserves in dollars, unless they were hedged in some way, and they needed to be hedged with gold. And that all the major central banks, Brodsky and Acquaintance theorized, were in on this, and that at some point, presumably when the gold was redistributed more fairly, presumably in favor of China and other Asian countries that had high dollar balances, then the dollar would be revalued, devalued, and gold would be upvalued, and nobody would lose. I mean, what central banks lost on their disproportionate dollar positions in their foreign exchange reserves, they would regain through the upward revaluation of gold. Whether that scheme, as Brodsky and Acquaintance perceived it, is actually underway. We do know that central banks have revalued gold against fiat currencies, devalued their currencies in favor of gold throughout history in order to offset excessive debt. And that's happened before. There have been currency revaluations before that have favored gold, and they likely will happen again. Now, the Scottish economist Peter Miller wrote in a paper, I think, I don't know what, 10 or so years ago, maybe a little longer, that the mathematical logic of a debt-based fiat currency system is that eventually debt on which interest is due goes exponential and devours the real economy. And so every so often, government currencies have to be devalued in order to bring interest payments back in line with what society can afford. And that gold has been the mechanism for devaluing currencies. I think that's very plausible too. I think that something like that will happen again. I think everybody agrees that the world's debt now is at just extravagant levels, and something has to be done about it. We've had experts talking about financial repression for some years now, which is the suppression of interest rates. There's talk about devaluation of the dollar. There's open talk among central banks that they're going to keep interest rates low, for many years, if not until the end of time. Why should they do that? Well, they know that that debt has gotten out of control, and that eventually interest payments will get out of control and devour the real economy. So gold is the mechanism central banks have used in the past and likely will use again in the future to manage the value of their own currencies and to make interest payments more bearable, maybe even to accomplish what might as well be called the debt jubilee. If interest rates are driven down to zero, who cares how much debt you have? You don't have to pay anything on it.
And that reminds me of another of your famous phrases, well, famous in my book, where you say there are no free markets anymore, just interventions. And you said that quite a long time ago. And I think now it's very prophetic, because if you look at what's been happening since March this year, all of the central banks creating unlimited money, intervening in all markets. What's your take on the new phase? It looks like an end game play that's happening now since the middle of March 2020.
Well, it's acknowledged now anyway that central banks are intervening in a lot of markets. I think when I made that comment, I think it was at GATA's Washington conference in 2008, I simply remarked that once central banks start intervening in markets and trying to defeat the market system, they create a very big problem for themselves, because markets tend to try to reassert themselves. And once you do one intervention and it starts to fail, you have to do another intervention to prop it up, and then another and another and another to keep your interventions from imploding. Now, when I voiced this back in 2008, whenever it was, that was tinfoil hat time. Nobody could possibly acknowledge that central banks are intervening in the gold market. Now today, nearly everyone acknowledges that central banks are intervening very powerfully in every market except gold. Now, maybe in another 5, 10, 20 years, respectable analysts will acknowledge, oh yes, they've been intervening in the gold market as well. Did I ever expect that intervention would reach the levels that it has reached now? I tried not to to contemplate that. I don't think anybody expected that it would get this far, but it's the consequence of starting down this road. Once you rig one market and that rig starts giving you trouble, you've got to rig other markets and more and more and more. And the real consequence here, Ronan, is that we have destroyed the market economy. I mean, here in the West, we teach, or we try to teach, purport to teach the developing world about the virtues of the market economy. Here in GATA, we think that that free markets are a requirement of human progress, that they've been, along with limited and transparent government, a great engine of human progress. But we've destroyed the market economy, and we're still presuming to lecture the developing world about the virtues of the system we've destroyed.
And that brings me to a question that I have a personal interest in, and I was doing a lot of articles and blogs on since late March, which is when the prices of COMEX gold futures diverged between the London gold spot price from around the 23rd of March onwards. The next day, actually 24th of March, the LBMA and the CME, who are the operators of COMEX, came out with a joint statement saying that they were jointly coordinating developments in the gold market to ensure the efficient running of the gold market. And then a week later, they came out with a second statement, pretty much saying the same thing, trying to instill confidence that whatever was happening behind the scenes as regards this divergence in price between the gold futures, COMEX, and the London gold spot price, to try to instill confidence that they had this under control. But it actually did the opposite, because it just didn't make any sense that the two main venues for gold price discovery would come out on record together, confirming that they're actually colluding. What do you think of this in public collusion of these two powerful entities?
Well, why should the market operators in London care what the market, what's being charged for gold, by the New York market? Aren't we supposed to have free markets? If gold costs more in one place than the other, then let it flow from one place to the other to balance out the arbitrage. I think what they revealed by that funny bit of dancing they did was that this is all basically a government financial establishment operation. Of course, they're all coordinating to try to keep the gold price under control. I mean, the LBMA and the New York Commodities Exchange and the BIS, these are all basically agents. When it comes to the gold market, they're all basically agents for the world fraternity of central banks, trying to defend their currencies and their government bonds and their interest rates against a free market. You know, you know, as I said, the main objective of central banking now, apart from maintaining the local monopoly on the currency, is to make sure that markets never develop.
And that brings me to another part of the puzzle connected with what you were talking about, the LBMA and COMEX, because the LBMA is basically an organization that was established by 7 commercial banks in 1987 at the behest of the Bank of England. The Bank of England said to them, establish this London Bullion Market Association.
Well, that was your research. You're the one who figured that out.
And one of those banks was JP Morgan, who always seems to be involved in everything that is going on in the precious metals market. And I wanted to get your take on that very question. The fact that recently JP Morgan and Scotiabank have both been fined and charged not only by the CFTC in the US, but by the Department of Justice in the US. But these 2 banks are still literally running the gold market in both London and New York. You have JP Morgan and Scotia, who both are 2 of the approved vaults of COMEX. They're both clearing members of the CME and COMEX. They're both trading gold futures still in New York. They're both, JP Morgan is a vaulter in London. It has a huge vault. Scotia and JP Morgan are LBMA market makers. Not only that, they're 2 of the 5 banks that are the clearing members of London Precious Metals Clearing Limited, which is the unallocated gold clearing mechanism in London. And the other banks involved in that are their buddies, HSBC, UBS, and probably to a lesser extent, ICBC Standard Bank. But what do you think of the fact that these banks have been fined millions and millions, and they're still allowed to continue?
Well, I am a little confused about some of it, Ronan. I think basically they're allowed to continue because the primary operation here is a government operation. I think the banks have very likely been front-running government trades that they were doing, and some of their staff members were exploiting this inside information for their own benefit and maybe the benefit of certain clients. I'm not sure, but yeah, you know, criminality in the big Wall Street banks has not been very bad for business. You know, very often the fines that are levied against them are very small compared to the profits they might have made from their criminality. But I am a little surprised that the Justice Department seems to be going after the JP Morgan traders as much as it is, because I think Morgan has been very much an agent for the U.S. government in rigging the monetary metals markets. I suspect that JP Morgan as the bank has as much on the U.S. government as the U.S. government has on JP Morgan. So I'm kind of surprised at the prosecution. But listen, the prosecution hasn't finished yet. Who knows that we'll very likely end up in a plea bargain and some other mild fine for JP Morgan. Probably the most negative aspect of the prosecution right now is that it's holding up the class action lawsuits against JP Morgan and other bullion banks for rigging the gold market. It's preventing the discovery and deposition that ordinarily would be undertaken in those class action suits, because the Justice Department has asked the federal court to postpone any action in the civil class action lawsuits. We probably won't find out what's really going on until discovery and deposition resumes in the class action lawsuits. But look, criminality in the Wall Street banks, I mean, that's the way of doing business now, and they get away with it. And even though they're primary dealers in U.S. Treasury securities, their criminality doesn't matter. That's really how far I think this market rigging and this criminality have gotten out of hand.
Yeah, and one thing I'd add to that, what I'm most puzzled about is the fact that these banks, these commercial banks, JP Morgan and Scotia, they're still members of the London Bullion Market Association, but they signed up to what the LBMA calls the Global Precious Metals Code, which specifically says that they're not allowed to manipulate markets, and specifically it has various sanctions for banks found to be manipulating. The same goes for COMEX. CME has a code of conduct for its members, and they have to follow the Commodity Exchange Act and the internal code of conduct. But these banks have clearly breached those internal codes of conduct, and nothing happens.
Well, I think the reason for that, Ronan, may be simply that they are exempt if they are executing government trades. We have put this question, and so has Congressman Mooney from West Virginia, has put this question to the U.S. Commodity Futures Trading Commission. That is whether manipulative trading in the futures market undertaken by a broker who is acting for the U.S. government is legal or illegal. Is it authorized by the Gold Reserve Act of 1934 that established the Exchange Stabilization Fund and that fully authorizes the U.S. Treasury Department to rig any market, not just in the United States, but in the world? Our question to the CFTC was, is manipulative trading subject to the Commission's jurisdiction if it is undertaken by someone acting for the U.S. government? The Commission refuses to answer that question, not only for us, but for Congressman Alex Mooney of West Virginia. To me, that gives the game away. These are government agents, and when you see them breaking the law, it's because they're acting as government agents. They have the authority under the Gold Reserve Act of 1934. They're acting for the Treasury Department and the Exchange Stabilization Fund. No law applies to them. They can rig markets. And in fact, when I was in U.S. District Court in Boston in 2001 for the one hearing that was held in Reg Howe's case, his lawsuit, excuse me, against the Bank for International Settlements and the Treasury Department and the Federal Reserve and the various bullion banks, an assistant U.S. attorney got up and moved for summary judgment. That's for a peremptory dismissal of Howe's lawsuit on the grounds, the Assistant Attorney General said, that the U.S. government claimed the power under the Gold Reserve Act of 1934, acting through the Treasury Department and the Exchange Stabilization Fund, to rig the gold market exactly as Howe's lawsuit complained of. And the government argued that the rigging lawsuit had to be dismissed because the government has the power to rig the gold market.
And why do you think that the mainstream financial media never want to cover these topics? They never want to cover anything to do with central bank operations in the gold market, central bank gold lending. I think, as I mentioned to you one time before, the Russian media, Russia Today, and the Vietnamese media are more willing to discuss these topics than the Western media. And I remember one time, I think it was you who put me in touch with, or put a Wall Street journalist in touch with me to talk about the New York Fed gold vault in Manhattan. And they produced an article about that, but I think they missed an opportunity because even though I told them a lot of interesting information, they only superficially covered it. Why do you think that the FTs and the Bloombergs of this world and the Wall Street Journal don't want to go there, whereas other countries who the US would say aren't really free markets do go there?
Well, I think it's because in the United States, it's considered a matter of national security. It's it bears very heavily on the standing of the US dollar around the world. So that's a national security matter. The dollar is the primary mechanism of American imperialism in the world today. And the nice thing is that most of the world doesn't understand it. The main mechanism of the Nazi expropriation of occupied Europe during World War II wasn't done, by force of arms. It wasn't a matter of the SS going into the Louvre and taking the paintings off the wall, though that kind of thing happened. The Nazis economically exploited occupied Europe during World War II because they controlled the currency markets. They went into the central bank and changed the exchange rates for the European currencies, so that all of a sudden the Reichsmark was worth so much more than the local currency. All production flowed out of occupied Europe and into Nazi Germany, and nothing flowed back. Well, that's what happens with the US dollar today. The US dollar is the primary mechanism of imperialism by which the United States exploits and expropriates the rest of the world. Therefore, the mechanisms for keeping the dollar strong are matters of national security. Now, the American press, while it hates the current incumbent of the White House, I think is against that guy. It's not against the government. It's not prepared to do any reporting that really strikes at the heart of government power in the world. And it has its own. The press has its own economic interest to stay away from the issue. I tease our chairman, Bill Murphy, about this from time to time because he's as upset as I am about the cowardice and uselessness of mainstream financial news organizations. Well, this dollar policy, this gold ringing policy, is carried out by the major Wall Street investment banks. If you go through the Wall Street Journal, on page A3, there's a big ad for JP Morgan Chase. You go to page A5, there's a big ad for Goldman Sachs. You go to 5A or 7A, there's a big ad for Citibank. And Murphy wants to know why GATA is not on the cover of the B section.
So one could understand why mainstream media might want to self-censor, self-censorship, and why they would be reluctant to cover or investigate these type of matters, even though they have huge financial resources. But why, on a slightly different but similar issue, why do gold mining executives of the large gold mining companies, who obviously have a vested interest, you would think, and their shareholders in having a high gold price, why do they not want to touch this issue as well? And the same question goes for the World Gold Council. Again, organizations with huge financial muscle and huge research resources, they too don't want to touch these issues.
Yeah, well, there are a few mining executives.
Oh, sure.
A few, but you're right. 99.9% of them don't dare raise this issue, but it's very easy to understand why. Excuse me. Mining is probably the most capital intensive business in the world. You can't develop a mine, you can't operate a mine without getting billions of dollars in hand. You can't develop a mine without being subject to government mining patents and environmental regulations and royalty requirements. You can't develop a mine, you can't operate a mine without having access to the biggest investment banks in the world, because mines are so damn expensive. Well, that means it's very hard to succeed in the mining business unless you have very good relations with your government, because your government can shut you down on any pretext at any time for royalties or permits or environmental regulations. And you've got to be on very good terms with your bankers, and not just your bankers, but the biggest bankers in the world, most of whom are primary dealers in U.S. Treasury securities and have very intimate relations with the U.S. government or or their own national governments. Well, when GATA goes to a mining company chief executive officer and asks, hey, could you help us a little bit here? Basically, we're asking him to risk cutting his throat with his own government and cutting his throat with his own bankers. It's no surprise that they don't even want to take our phone calls.
Yeah, I can see how in theory, mining executives wouldn't want to really do that. But I guess it just falls to us who are independent. It's like the Davids versus the Goliaths sometimes. And I wanted to ask you one final question. It's something that I've always thought about GATA and yourself in particular since I saw you at the GATA conference in 2011. I would say that GATA are the group of people who consider themselves to be GATA supporters, are American patriots in the true sense of the word, and that you are an American patriot, someone who is working constantly for the vision of an American republic rather than an American empire. Would you say that you can see the similarities between what GATA does and patriotism, not just for a particular country, but for the liberty and economic freedom of the world? Do you think it is a battle on that giant scale between what's right and what's wrong?
Well, we do like to think of our work as having some noble aspects to it, not only for our country's ideals, but for fairness among the nations and the brotherhood of man and all that. Yeah, we believe in the ascent of man and human progress and free and transparent markets and limited and accountable government. And those are, or they used to be, American virtues. Yes, a republic, not an empire. We want our country to lead the world, but by example, not by rigging everybody's markets and expropriating people who are less advantaged than we are. So yes, in that sense, I'll wave the flag with the best of them, and we will continue this work. And if we are doing the right thing, I think we will have a chance at succeeding.
Yeah, I agree. I think it's great that a few people with very limited resources can achieve so much with a few research resources and not a lot of financial resources. So, Chris, it's been great talking to you. It has reinvigorated my interest in finding more information out for GATA. And when I get some time, I will be scanning various sites, looking for those elusive secret documents. So,
yeah, I should emphasize, Ronan, how grateful we are to you, because you have come up with so much material, over the years. I mean, I've done myself very little original research. I'm basically the archivist, and insofar as I help publicize this stuff, I'm getting credit for the work of others, or God is getting the credit for the work of others. And certainly among the researchers in the gold sector, you're probably at the top of my list.
Oh, thank you very much. But it was your motivation at the GATA conference which kicked off my interest in the area. Hopefully, if there was another GATA conference, there might be some other people in the audience and future audiences who would follow suit.
Well, we're hoping to have a victory tour around the world. And, most of the expense with the bar bill.
Maybe 2022 would sound like a good year. We can look forward to that. Okay, thank you very much, Chris.
Thank you, Ronan.